If you are currently receiving Social Security or SSI benefits, I need you to pause whatever you are doing right now and give me just a few minutes of your attention, because there is a rule set to take effect in July 2026 that changes who can access your bank account information, how frequently that access occurs, and what happens to your monthly payment if they discover something you never disclosed. This is not a suggestion being floated around. This is not legislation sitting in a committee waiting for a vote. It is a verified policy change working its way through the Social Security system at this very moment. And the majority of seniors I hear from have either never come across this information or have caught a frightening headline without truly grasping what it means for their own monthly deposit. I am not discussing something that could possibly happen at some point down the line. I'm talking about a genuine shift in how your benefits get confirmed starting this coming summer, and there are specific things you need to know before it reaches your account. For more than 10 years, I have researched retirement benefits, senior tax programs, and the financial regulations that impact older Americans every year. The pattern I observe most reliably is that honest, dedicated people get caught off guard by a rule change that no one ever sat down and explained to them in straightforward language. That is precisely what I'm here to do for you today. Before we dive in, I want to ask you something personally. Have you subscribed to this channel yet? If the answer is no, press that subscribe button right now and activate the notification bell. Here is why that decision matters specifically to your situation. Social Security regulations, Medicare guidelines, and the verification systems behind your benefits shift constantly. And when those shifts happen, nobody mails you a letter clarifying what it means for your circumstances or what steps you should take. This channel breaks down every single change in clear everyday language the moment it occurs. If you are not subscribed, the next update that directly affects your monthly payment will pass right by without you ever realizing it happened. Subscribe now and let us work through this rule together. Here is what we're going to cover today. First, what this new bank access rule actually means in plain language, without the confusing bureaucratic terminology that makes it feel more alarming or complicated than it really is. Second, who it applies to right now, and the particular group of seniors who assume they are unaffected but absolutely are not. Third, exactly what the system searches for inside your accounts, including accounts you may have completely forgotten about. And finally, the scam that has already latched onto this rule and is targeting seniors who just learned about it, along with the precise steps you can take to protect yourself and remain compliant. Stay with me through every section, because the piece most people misunderstand is near the end, and it is the piece that actually keeps your payment safe. Let me begin with what this rule is and why it exists. The system at the heart of all this is called AFI, which stands for the Access to Financial Institutions System. In simple terms, AFI is the electronic tool the Social Security Administration uses to connect with financial institutions and confirm what you actually have sitting in your accounts. It has been around for several years already. What is changing in 2026 is how often they are required to use it and how few barriers remain in the way when they do. For a long time, a threshold rule existed. The SSA would only conduct a full bank verification when your reported resources exceeded a certain dollar amount. If you stated that you had very little, they frequently did not investigate further. That threshold worked like a kind of speed bump. It restricted how frequently the agency could reach into your accounts. Under the rule change now taking effect, that speed bump is being eliminated for a significantly wider population. The agency is now directed to conduct financial institution verification on essentially all new SSI claim approvals, regardless of how much you report having, and to carry this out more regularly throughout the entire duration of your claim. I want to be specific about why this is happening, because the reasoning matters. The SSA's entire purpose is to deliver the correct amount to the correct person at the correct time. SSI in particular is a needs-based program. It is designed specifically for people with very limited income and resources, and it carries a firm resource ceiling. For an individual, that ceiling has long been set at $2,000 in countable resources. Exceed it, and your eligibility is impacted. The agency's view is that improper payments, money sent to people who were already over the resource limit, represent one of the most significant problems within the program. So the logic is straightforward. If they verify your accounts more often and more completely, They identify resource issues earlier, before a large overpayment accumulates that they then attempt to recover from you. That is the legitimate side of this, and I want you to hear it clearly, because understanding the agency's reasoning is exactly what positions you to stay on the right side of the rule. An overpayment is not free money. If the SSA sends you funds you are not entitled to because you exceeded the resource limit, they will eventually discover it, and they will require it back. More frequent verification is partly the agency's attempt to stop that problem before it grows into a debt attached to your name. Now here is the part that catches people off guard, and I want you to really sit with this for a moment. Many seniors hear about an SSI bank access rule and immediately think it has nothing to do with them. I receive regular Social Security retirement, not SSI, they say, or I receive Social Security disability insurance, and that is a different program. And you would be correct that this specific rule today is written for the SSI program. But here is what I want you to understand about the direction everything is heading. SSI is almost always where these verification changes begin. It is the needs-based program, so confirming your resources is already built into its fundamental design. The tools, the systems, and the automated bank access capabilities get developed and expanded inside SSI first. And the broader conversation happening in Washington, on both sides of the political spectrum, increasingly circles around the concept of means testing other benefits further down the road. Means testing simply means adjusting what you receive based on how much money and how many assets you already hold. And here is the critical point. You cannot means test anything without first being able to examine someone's accounts. The verification infrastructure being constructed and expanded for SSI right now is the exact same infrastructure that would be required to review resources for any other benefit program in the future. So even if this precise rule does not affect your retirement payment today, the underlying system is what you need to understand because it reveals where all of this is going. I'm not telling you this to cause alarm. I'm telling you so that you are not caught by surprise later on. Let me show you what the verification actually does once it activates, because this is where things get concrete. When the SSA runs AFI on your record, it does not simply check the single account you disclose to them. The system can conduct up to 10 geographic searches tied to your personal information. It searches based on your residential address and can also pull in addresses and identifying details connected to your representative payee, if you have one. It detects the accounts you reported, and critically, it detects accounts you did not report. This is the element I really need you to absorb, and it is not about concealing anything. It is about forgetting. Many seniors have an old account tucked away somewhere they have not thought about in years. A savings account at a bank that was later purchased by another institution. A small credit union account opened decades ago for an auto loan that has been sitting with a few $100s in it ever since. A certificate of deposit a family member established. You may genuinely have no memory of these accounts existing. The system does not take forgetfulness into consideration. It locates them and it counts them. So if you are on SSI and you have been operating under the assumption that your countable resources are safely under the limit, an old forgotten account appearing in a scan could completely alter that calculation in a way you never anticipated. Here is the complete breakdown of what the system is designed to locate. It searches for what are called liquid resources held at financial institutions. That includes checking accounts, savings accounts, money market accounts, certificates of deposit, credit union share accounts, and special purpose deposit accounts like Christmas Club or Holiday Club accounts. Essentially, anywhere you can deposit funds or hold a certificate at a bank or credit union. This verification is built to reach. It operates across all 50 states, the District of Columbia, and the territories. The overwhelming majority of financial institutions, approximately 96%, participate in the automated system, meaning the agency can verify electronically without your involvement in that particular step. For the small number that do not participate, the agency uses a paper-based process instead. But the reach is nearly nationwide, and the bank scan is not the only system operating in the background. An entire set of tools works alongside it to assemble a complete portrait of your financial life. There are payroll information exchanges that can inform the agency of what you earn through an employer's payroll system, sometimes quickly enough to adjust your very next payment. There are systems drawing from national new hire databases. There are wage verification tools designed specifically for SSI. Each one exists to confirm a different piece of your income and resource picture. The point is not to memorize the names of these systems. The point is to recognize that verification in 2026 is automated, layered, and far more thorough than the system many seniors remember from years past. Before I walk you through exactly how to protect yourself, I want to say something directly to you, because the fact that you are still here right now tells me something meaningful. Most people encounter a title like this one, click on the video, feel a wave of anxiety, watch for 2 minutes, and move on without ever learning what to actually do about it. You stayed. That tells me you are serious about protecting what you depend on, and you understand that knowing how a rule functions is the difference between being blindsided by it and staying one step ahead of it. So if you have not subscribed yet, do it right now. Press that button and turn on the notification bell, because the verification systems behind your benefits are exactly the kind of topic most seniors only discover after a problem has already landed in their lap. You are here early. Stay subscribed so you remain that way. Now let me walk you through what this looks like in practice, using the type of example the agency itself uses internally, so you can see clearly how a verification plays out. Picture someone applying for SSI who discloses a small checking account holding about $20 and a $100 certificate of deposit. Their total reported resources come to around $120, well beneath any threshold. Under the new approach, the agency still runs the bank verification, even though the reported amount is minimal, because verification is now required regardless of what the applicant claims to have. The scan returns and confirms the checking account, finds no other undisclosed accounts, and the person's resources are validated right around where they stated. Because everything aligns and falls within the small tolerance the agency applies, the process moves forward without issue. No complications whatsoever. Now change a single detail. Suppose that same scan returns showing the checking account holds significantly more than the person reported, or it surfaces an additional account they never mentioned. Now the agency must investigate further. It must verify the value of that certificate of deposit, examine the other balances more carefully, and the small tolerance that would have allowed them to skip additional steps no longer applies because the verified total is higher than what was reported. And here is the consistent thread running through the entire life of a claim. If your verified resources remain low and stable, you may face fewer repeat scans. But if a scan ever shows you near or above the limit, expect to be verified again and again at multiple intervals, because the agency is specifically directed to continue checking whenever the numbers suggest a resource concern. So what does all of this mean for you, personally, and what actions should you take? This is the part most people skip over, and it is the part that actually safeguards your payment. Let me present it to you as a clear and actionable set of steps. First, if you are on SSI, locate every single account that carries your name, not only the one your deposit arrives in. Sit down this week and compile a thorough list. Your primary checking account, any savings accounts, any old accounts at banks that may have changed names or been acquired by another institution, any credit union accounts, even those opened decades ago and long forgotten, any certificates of deposit, and any club or special purpose accounts. If you are uncertain whether an old account remains open, contact the institution and ask. The objective is simple. You want to know everything a scan would uncover before the scan uncovers it, so there are no unexpected surprises that push you dangerously close to the resource limit. Second, understand your countable resources in relation to the limit. For an individual on SSI, the long-standing countable resource ceiling is $2,000. Add together the liquid resources across every one of those accounts. If you are comfortably beneath that figure, you have considerably less to concern yourself with from a verification standpoint. If you are anywhere near it, this is your moment to understand precisely where you stand, because being close is exactly when a forgotten account can push you over without any warning whatsoever. Third, if your financial situation has changed, report it accurately rather than waiting to be discovered. The agency is transparent about this. The systems are built to detect unreported resources, and the safest position you can occupy is always accurate and timely self-reporting. If you received money recently, even a modest sum, understand how it affects your eligibility and what your reporting obligations are before the next verification cycle runs, not afterward. Fourth, And this is the truly protective core of everything. When the agency contacts you regarding verification or sends you a redetermination notice, respond promptly and honestly, and keep documentation of everything. The single most damaging thing you can do during a benefits verification is ignore it or provide guesses. If you are uncertain about how a particular account or asset affects your situation, that is precisely the kind of question to bring to a qualified professional who handles these matters, because the answer depends entirely on the specifics of your circumstances, and I cannot provide individual guidance through a video screen. Now, I want to address something critically important, because every time a new rule like this one receives attention, a scam attaches itself to it within days, and this one is already circulating. Here is exactly how it operates. A senior hears about a new Social Security bank access or verification rule from a video, an article, or a conversation with a neighbour. Shortly afterward, they receive a phone call or an email from someone claiming to be a Social Security verification specialist, a benefits compliance officer, or a representative from a federal account review service. The caller explains that because of the new 2026 rule, the senior's accounts must be verified or pre-cleared, and that they can manage the entire process, protect the senior's benefits, or shield their accounts from the scan for a fee. Sometimes a few $100s, sometimes a percentage of the ongoing benefit. Here is the single sentence that exposes this scheme every single time. There is no fee, no service, and no third party capable of shielding your accounts from official verification or completing this process on your behalf. The verification is something the Social Security Administration conducts directly and internally. There is no authorized intermediary who can opt you out of it, pre-clear your accounts, or protect you from it in exchange for payment. Anyone offering that service is selling you something that does not exist, and what they are truly after is typically your Social Security number, your bank account information, or a verification code, which is the real purpose behind the call. Write this down because it is your shield. The genuine Social Security Administration will not contact you without warning and request that you confirm your Social Security number or your banking details over the telephone to comply with a new regulation. They already possess your number. When they need to verify something, the legitimate process flows through your application, your redetermination paperwork, and official written notices, not through an unexpected incoming phone call demanding immediate action. If someone calls claiming they can handle the new bank access rule on your behalf, end the call immediately. Then, if you have genuine questions about your own situation, go directly to the source yourself. Contact the SSA at 1-800-772-1213, the number you locate yourself at ssa.gov, never a number provided by a caller. And report the fraudulent contact to the SSA fraud hotline at 1-800-269-0271 and to the FTC at ftc.gov. Those reports genuinely assist investigators in tracking these operations and alerting other seniors before they suffer financial losses. Let me bring everything together right now in the clearest possible way, because all of this ultimately reduces to a brief list of actions you can take this week. Number 1, if you are on SSI, compile a complete inventory of every financial account carrying your name, including old and forgotten ones, so you know exactly what a verification would find before it runs. Contact institutions directly if you are unsure whether a particular account remains open. Number 2, calculate your total liquid resources across all of those accounts and understand where you stand against the resource limit. If you are close, treat that as your clear signal to seek clarity immediately, because a forgotten account is precisely what pushes a compliant case over the threshold. Number 3, report any changes accurately and respond to verification or redetermination notices without delay. Accurate and timely reporting on your end is the single strongest protection against an overpayment that you later get required to repay. When a question is specific to your finances, bring it to a qualified professional who can examine your actual situation directly. Number 4, guard yourself against the scam. Nobody can shield your accounts from official verification in exchange for payment. The agency will not contact you unexpectedly, demanding your Social Security number or banking details to comply with a new rule. If that call arrives, disconnect and verify everything directly through ssa.gov or the official number you look up on your own. I want to close by saying something directly to you, because I genuinely believe it matters. This rule is part of a broader shift toward more automated, more frequent, and more thorough verification of what seniors have in their possession. The systems are becoming increasingly capable of looking deeper, and that trajectory is not going to reverse itself. None of this arrives with a friendly explanatory letter walking you through what it means for your payment. The agency does not reach out to coach you through maintaining compliance. The system simply runs on its own, and the people who remain protected are not necessarily those with the simplest finances. They are the ones who understood how the verification operates, knew what it would uncover, and organised their own financial picture before it ever ran. You watched this entire video, which means you already understand this rule better than most seniors ever will. Now take the next step this week. Subscribe and activate the notification bell if you have not done so already, because the verification systems behind your benefits will keep evolving, and this channel covers every development in clear, everyday language before it arrives at your doorstep. The next update could be the one that directly affects your specific situation, and you want to be here the moment it appears. And before you close this video, share it with one person in your life who receives SSI or Social Security benefits. A parent, a sibling, a neighbour, someone from your place of worship or your local community. One share from you might be the thing that helps them organise their accounts before a verification catches them off guard. The system is not going to call them and walk them through any of this in plain language. You might be the only person who does. I will see you in the next one.